And finally, Dan Morgan, Head of Regulatory Relations for Europe at Ripple. And I guess that you have some experience in trying to educate policymakers, so maybe you can tell your take on how is the thinking evolving in connection with cross-border and real-time payments.
Thank you very much. First of all, a huge thanks to the Bank of Spain for inviting us here today. Obviously, as a private sector representative, to display what we're trying to do. Delighted that the BIS mentioned that cross-border payments was the killer app, because I'm focusing a lot on that today. It's a short presentation to outline who we are and what we're trying to achieve, and then we'll talk about a lot more in the panel discussion around some of the technology and some of the challenges, particularly in a regulatory session after that. So, for those of you that don't know, Ripple is a technology company launched in 2012 in San Francisco. Our aim is to remove the friction from cross-border payments using both DLT and crypto assets. If we think about where we are today, and we think about Bitcoin blockchain as the breakout technology, I think 10 years on, we're seeing a maturity in design-specific use cases. I mention this because Bitcoin blockchain is not suitable for cross-border payments or large networks because of some of the issues around settlement finality, which have been raised by the BIS, some of the issues around costs, and many more issues which mean, although it addressed the issue of digital scarcity, i.e. the double spend problem, which means the Bitcoin I've sent you I no longer have. It was that breakout technology. We're seeing much more design-specific use cases come to market. Again, with Ripple, we focus on the XRP ledger, which is very much around speed, settlement finality, and reach. So what exactly is Ripple? Well, as I say, we're live today, and it's a network of eventually two technology stacks which are integrated. The first is Xcurrent, which is a messaging and settlement layer. Essentially, the open source version of this is a technology called the Interledger Protocol. We see this as the HTTP layer of the Internet of Value, i.e. it's the interoperability layer. It can connect many different ledgers together no matter what they are. So for instance, the open source version of it has been used by the Bill and Melinda Gates Foundation in their Level 1 project to connect different mobile money systems in Africa today. The commercial version that we use, Xcurrent, for financial institutions is also as a messaging and settlement system, moving away from file-based messaging to one that's more akin to WhatsApp and can track. And we've seen similar copycats, obviously, with Swift GPI. Essentially, we would say this is much more real-time, where you can track payments from end to end. Much more certainty in the cost as well around it. And as well, the settlement is atomic, meaning all the money moves or none of the money moves. This is our primary product. We have 200 customers today which use Xcurrent. But with this system, it's still bilateral. You still need to pre-fund overseas and maintain relationships with banks overseas. This is probably okay when you're talking about US dollar or GBP or euro, where the cost of that relationship is commercial and the regulatory overhead is acceptable because it's a high volume corridor. But if you're going to go from Brazilian real to Philippines peso, the chance of that being pre-funded are quite low, and obviously you would have to go through a series of corresponding banking relationships, jumping from balance sheet to balance sheet. At each stage of that journey, a cost would be removed. Obviously, many banks in the system would make money out of the float and the system as is. So our view on digital assets is we feel that there's a role to connect different fiat currencies, particularly more exotic currencies where that bilateral relationship does not exist. And in our case, we use XRP as the bridge currency. How do we do that? We do that through the second part of RippleNet, which is on-demand liquidity, or XRapid, where instead of pre-funding overseas, we source for liquidity from digital asset exchanges in both the home and the beneficiary market. Very simply, obviously there's much more complexity to it, it's two domestic payments connected by a movement of XRP. So in this instance it would be USD to XRP at the home exchange, a movement of XRP across the ledger to the beneficiary exchange, and XRP to Mexican peso. The final payout could be over local rails, a direct relationship into digital wallets. On top of that, there's a messaging and settlement layer, which includes the Ripple payment object, which includes all the information you would get in a cross-border payment, KYC, for instance, settlement finality, any other legal issues you may have. At either side of this is a financial institution in our model. We're looking to connect fiat currencies, so they will conduct the KYC and all the checks that you would do in a normal cross-border payment. We're not looking to circumvent the system. It's live today. We've had 2 quarters and we've seen significant cost reductions. This is one of the examples that we have gone live with XRapid, but also quite, you may have seen, we had an important relationship with MoneyGram, again, who is now utilizing XCurrent as part of their treasury relationship, again, to significantly reduce their costs. Again, so we see primarily the use case here being retail remittances. I don't think we're going to compete necessarily with high volume corridors at the moment where that relationship is there. There are challenges as well, particularly on the banking side where the relationship, the regulatory environment for digital assets is still emerging. It's getting better. We've talked about FATF before. Basel Committee is looking at the prudential requirements around how you would hold or have exposure to digital assets. Things like how digital assets can have any exposure to financial market intermediaries, things like settlement finality. These are all starting to develop, and I think larger banks at the moment are starting to look at this in a more serious way. And obviously, as these rules and standards come in, I believe we'll see much greater adoption beyond payment providers globally. So that's it. It's a short presentation. These are some of the use cases that we see today from digital assets and how we try and use it. I think the future is very positive, but what we do need is much greater regulatory certainty.
Thank you, Dan.